Righty, welcome to the weekly analysis, March 18th, 2023. Selena, are you awake? Oh.
Yes, I'm awake.
Stay awake.
I'm awake. I'm trying to be smart, but I'm awake. Okay, hold on one second. Oh my gosh. All right, let me share my screen. There was 5 million pairs this week. So I'm gonna run through this really quickly. I don't want to bore you guys too much. Let me know if you can see my screen.
Yeah, we see it.
Cool beans. Great. All right. So we had 11 million pairs this week. AUD did as projected. It's one of those buy to sell. I did look a little deeper in a couple of the pairs, but not all of them because I would have been up all night. There was a 4-hour bullish order block at 1 a.m. Eastern Sunday night, or there was a 15-minute bullish order block 11 p.m. Eastern for an entry. There was a possible 124 pips there. AUD Chef, it tapped into the golden zone of the weekly order block. One of those situations you buy until it sells. There was a 6 p.m. Eastern 1-hour bullish order block on Sunday night. You could have held it to the golden zone for your 100 pips if you were trading the God's plan on this one, or if you would have held it longer, there was a total of 200 pips possible for AUD Chef. AJ, of course, they all did as projected, but I know this is the one Todd talked about that it retraced more than 100 pips if you were trying to use God's plan on this. It did tap into the golden zone in the weekly, but there was a possible 282 pips. And if you hedge, I think you would have been fine. And if I'm not mistaken, I think Todd posted a picture of this trade on his Instagram page.
But I'm sorry, Selena, if you had entered this trade properly, you'd have won. So only reason I said it didn't do as it was expected is because if you had entered, because I know we had at least one person, probably more than that entered the trade as soon as the market opened. Like in that dead period, if you had entered that trade, then you would have been over 100 pips in drawdown. If you had waited that 1 hour, you would have won the trade. So
okay,
with that as you may.
Okay. Did you question real quick? Did you have a hedge on this one?
On which
for
one?
AJ? On AJ.
You didn't need a hedge. If you had waited that 1 hour, you would have got paid 2 hours later. If you entered,
okay, so I looked, well, we can look later because I thought I looked at it to try to see when there was that entry that you wouldn't hit that 100 pips, if it retraced back. It was on the 1 hour. Okay. All right, got you. AU did as projected. It retraced back to the 78 of the weekly, possible 140 pips. CAD Chef did as projected with God's plan. It retraced to the 618. If you didn't take profit at 100 pips, there was a possible 194 pips on that one. Chef JPY, it did as projected. This pair had already begun to retrace. Remember, when we're talking about God's plan, if there's a lot of retracement already, you have to be careful. But there was a possible 564 pips this week on this trade. There was a few possible entries for the sale, but I didn't go too deep into it. EA did as projected. It was a God's plan trade. There was a 1 hour, 6 p.m. Eastern bearish order block Sunday night for an entry. That was possible 365 pips. Euro Chef did as projected, buy it to the sales, possible 204 pips. EG did as projected, sell into it buys, 144 pips. EJ did as projected, retraced to the 78, and then it began to sell, possible 583 pips for the week. EN did as projected, sell into it buys, 455 pips. GA, another God's plan, did as projected. It did not retrace to the golden zone, but it did retrace for 243 pips. It didn't make it to the golden zone, but if you did God's plan, you still would have got paid. GBP Chef did as projected, buy into its sales, 322 pips available. GJ did as projected, possible 495 pips for the week. GN did as projected, price did buy before it retraced to the 78. So this pair bought up some before it started to do the weekly retracement. A possible 289 pips. NAS 100 did as projected, buy until it sells 850. I don't know if it's points or pips with the indices. NZD Chef did as projected, buy until it sells, possible 166 pips. NJ did as projected, price retraced to the 78 of the golden zone before it began to sell, possible 292 pips. NU did as projected, buy until it sells, possible 144 pips. SPX 500 did as projected, price tapped into the golden zone, 168 pips. US 30 did as projected, however, price did not retrace to the golden zone. USD CAD did as projected, price retraced past the golden zone, possible 171 pips. And I think this is gold. Did its projected price had already retraced a lot in the previous week, buying to its sales, and that was the points. In Discord, Todd, there was a young lady who had a question about a couple of the pairs. There were indices. I don't know if you saw that or not, but if you did,
what did it say?
Hold on, I'll tell you in a second. Let me do these ones right here real quick. So this week, these are the order blocks that I saw. I also wanted to mention, just in case, if you were looking, some of the pairs that we traded last week, they had, they didn't retrace to the golden zone for the move of the week that we usually wait for. There's opportunity there if you were looking for something, if you just wanted to see it. Like sometimes we forget about those previous week's order blocks and they may have sold to the golden zone, but then that the weekly move that we're looking for maybe not happen that week, it happens the next week. So there's some movement there, I noticed. It was Mia. I don't know if she's on the call today, but she asked about she wanted to trade God's plan on gold or UK 100, the Frank 40.
Hey, I'm sorry. Did we just show a chart that we had 23 winners?
Yes, sir, we did.
Am I looking into the camera?
We can't see. Oh, can we see you?
Y'all see me?
No.
No, we can't see you.
That's because Selena's sharing her screen. Oh, wait a minute.
I'll stop sharing. I stopped sharing. But your screen is not on. Your camera's not on.
Oh, he's talking about in the let me see. I see you. Wait a minute. No, I can't see you.
I don't know why.
Blackout.
Yeah, I don't know why it's acting like that. But that's cool. I want you to picture me.
Oh my God.
I'm right in your camera. Why would you trade anything else?
Woo!
23 winners. Listen, y'all. Please listen, please. If somebody is showing you a better way to trade, I encourage you to do it. If you have win after win after win, please do yourself a favor and take one of those winners. Please. You know, I can't, I don't know what else to do. I don't know how else to say it, but I mean, I can't even imagine if you've not found success, why you would try to find something different. You can trade this way on any pair if it has a retracement or if it has to pull back your 100 pips. But you know, I don't know about the UK 100 and all that because it's not necessary for me to trade it at this point. But you know, maybe you know, I'm assuming that it probably did move enough for you to trade the retracement. I haven't looked at any of those pair, and I don't trade it. I'd rather just trade the NAS if I'm trading
I think her question might have been as far as the 100 pip stop loss. I thought maybe I read it wrong.
She was she wanted to do God's plan on those pairs.
Yeah, and I think her question was because indices have a lot more movement.
They do.
So would the 100 pair stop loss be sufficient for those pairs? Would God's plan 100 pip stop loss be sufficient for those pairs, or for the indices, I should say?
Well, they don't use pips; they use points. So I wouldn't use the 100 pip stop loss on an index.
1,000 point.
But maybe the points will work. But you're going to have to do your individual analysis. If I don't analyze it and show you where I would get in on the weekend, then I don't want to be held accountable for that thing, going further. I mean, that's just the honest truth. I don't know. There is a way to do it and have your stop loss placed in the proper spot, but I think you have to look at the chart to see where it's going, to whatever imbalance or whatever order block, and then you'll know where you can place your stop loss. But again, guys, if we analyze pair on this day every week, I don't understand why you wouldn't just take one of the winners. I don't get it. I don't get it. I do understand if you get in the trade and you lose, and it happens a couple of times. Now, we're all going to lose a trade eventually. But what I'm saying is, especially for the people who have not found success, and I'm just going to assume that if you're asking me about the God's plan strategy, then you may not have found success on your own, or you just want to try this strategy. Try it on a pair that we're picking out every week. I mean, there's something for everybody in these pairs, guys.
And demo it.
Of course. I mean, I think everybody should be a demo until you're ready to trade a live account. But we should all be back testing our strategies, right? I mean, I know this works. I've back tested it. I've traded it. But what I'm saying is, if you're a newer person, you're coming here, you want to trade the strategy, take one of the pair that we analyzed. Golly, we had 23 freaking pair last week. I mean, bruh, I guess I just don't understand the objective. Like, does anybody understand the objective or the reasoning behind it?
I'm not, I don't know. I know I'm assuming, because I think she may be on the call. I don't know. So, like, it's about my 2 cents. I'm not in her brain, in anybody's head. And I hope she feels free to share if she's on. But I think sometimes you're just trying to find your own way. You know what I'm saying? Like you used to tell us in the beginning, if I drop dead tomorrow, what y'all gonna do? When we were in WhatsApp, what you gonna do? Like, you got to find your own way. So, it just be, new people they haven't been in a group long enough to be like, feel 100%, even though you can go back in history and see that we've been doing this for a while and it works. But at the same token, they may just be trying to find their own path.
Okay, I get that part, right? And I don't discourage anybody from finding their own way. But here's where I challenge that. If you're asking about God's plan, then you're not finding your own way. You're trading this strategy.
Point taken.
So what I'm saying is, and maybe I'm missing something, I haven't talked to her myself, but if you're trading God's plan and there are 23 pair that we've talked about, why not just take one of those pair, right? This week, there are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Bruh, I mean, I think there's something for everyone. That's all I'm saying. And I might sound like I'm yelling or whatever. I'm not, but I'm just trying to stress a point here. It's almost as if somebody is handing you a paycheck, and as they're handing you the paycheck, you're asking, how to get some money, So I guess that's what I don't understand. When we first learned how to trade, they tell, hey, if you can read the chart, you can trade any asset class. And I believe that. So I think much along those same lines, this strategy works on whatever pair, right? I think the beauty of what we're doing is we're taking a weekly candle and we're basically just trading a retracement. And it is just going to pull back, and we want to make sure it pulled back that 100 pips. Okay, I think let me see.
Sorry, can I just say?
Yeah.
The UK 100 dropped. It's been dropping for the last couple of weeks, I think. But
oh, Todd, she did come back. I'm sorry, LaShawn. She did come back. She commented in the chat section.
Okay. I get it. So basically, she's saying she just wanted to make sure she understood the strategy. Cool. And I agree with that. Okay. So do you understand? Okay, she says she's on a computer, but so do you understand the strategy? Or did you get your answer? Okay, if you want,
I'm not sure she know about the video either, Todd. I'm not sure she knows.
Not 100%. Okay, so there's a video on the YouTube that I made on God's plan. I don't know if you've watched it or not, but if you need more than that, then let's hook up for a one-on-one, sometime this week, and I can explain it to you individually. And I don't have a problem with doing that. Because I think, I'm like you, I would rather everybody understands how to use it, how to get in, what the purpose is, and all that. So I'm cool with that. All right, go ahead, Selena.
No, I'm done. And as you can see, these are the weekly order blocks for next week. I only saw one on God's plan, and I tried to go down on the weekly and the daily. But of course, some of these weekly order blocks, of course, are good candidates for God's plan as well. But one that wasn't a weekly order block. That's all I got.
I don't really care if it was a weekly order block. I just, as long as we got 150 pips or so. At least
right, exactly. But I had to have a way to, show the difference that it's a, yes, sir. Yes, Terrence.
So you saying you only saw one that'll work for God's plan?
That's what I saw, but I could be wrong because
you definitely left a couple off.
Okay, well, hey, that's why you here, brother. You can straighten me out. What was the two? What did you see that I missed? Because me and you talked about Chef JPY.
Yeah, so that one, I don't see that one in blue. And then EN.
Correction, Terrence, it's not going to be in blue because it's a weekly order block. So whether you trade it as a weekly order block or use God's plan, either one. So if it's a weekly order block, I'm still going to state what order block it is. So Chef JPY and EN were both weekly order blocks. So I signified it as an order block, which makes it even more confluence because you can do God's plan because the candles were long, if that makes sense.
Okay,
but for the other one, I just put it as God's plan because it wasn't an order block. It's just was that, the candle moved a lot. So it's going to retrace.
Gotcha. So that means you should have
apologize to your sister.
No, now that means you should have added UJ then.
Okay, I missed it. Okay, fair enough.
But I understand what you're doing. You're only putting God's plan on strong weekly candles that aren't order blocks.
Right, and I still do the same order blocks that I was doing. But they can be both. Okay, cool beans.
So you saying you should add UJ to this, Selena?
That's what Terrence said.
Yeah, I mean, UJ, how many pips did UJ move?
Yeah,
It-
it definitely should be on there.
347.
It
And it's
moved
probably-
up 356 pips.
Bruh.
And
Bruh.
it's probably gonna confuse people that because they're on all the order blocks, you can't even do God's plan on. So it's probably gonna confuse people a little bit. But yeah, UJ is definitely qualified.
So what I would like to happen, I like UJ. I like UJ.
My favorite is FJ.
Okay, I mean, that, you know, I'm not going to give my favorite because I like it for everybody else to. But I think that
As long as you analyze our favorites, we all right.
well, I mean, I agree with UJ. I mean, I agree 100%. I believe we're going to get a
Todd, why are you opposed of for sharing your favorite again?
because I need everybody to be involved. You know, I mean, it's kind of like when I was in Ruby's group and she used to do her weekly analysis, and then all of a sudden she stopped. It got hard for everybody. I don't
It's
mind.
a little bit deeper than that. He'd be mad at us because we don't take
Well, I mean, that of course, if a lot of times I'll say, hey man, this is the one I like. And then on the Tuesday call, nobody took the trade. I mean, why am I wasting time,
Hey, coach.
Britt says she
only
don't fall in
did
that
that
category.
Yeah, when you traded gold, that's it. But I'm trading gold this week in my demo, so I'm gonna get that.
Same.
Who said something?
Britt.
Oh, okay. Yeah, I like all those. I like those pair, but sometimes it's disheartening, when you put the information out and everybody does their own thing. And look, I don't mind, because it's been a lot of wins lately, which is what we want to see. But I want you guys to gain confidence in what you see too. You don't have to wait until I say it, I mean, you call the trade out, and I can look at it, but hopefully everybody's at a stage where they understand what we're doing. And for those of you who don't understand, let me break down this pair right here. UJ, okay? First of all, the important thing is next week we have FOMC and the interest rates are supposed to raise. I don't know if they're going to raise or not, these bank failures. But what I would like to see happen is I want to see this retracement happen early in the week, right? And I want to explain what I look for and what the strategy is. So I want to see healthy price action. And healthy price action, if you know how to look at a chart, is where one candle stops and where the wick stops. You want the new candle that begins, right? I want this new candle that begins to either go up, and I need it to go up and touch the wick, or if it's touching the body, then it doesn't have to touch the wick. It needs to go down, right? It forms a wick. This third candle, I need it to go up, and the wick of this third candle needs to touch the wick of this previous candle, right? This is the level that I want to see price make it to. And this can be considered as healthy price action, right? So I want to make sure that if price pushes back up to this level from where it is right now, that it's going to give me 100 pips, right? And that will give me 228 pips. Now, to double check my work, right, I'm going to pull a Fibonacci out. The Fibonacci allows me to trace the candle's movement from last week. I'm going to take it wick to wick. And I want to highlight my golden zone. Because even though healthy price action takes the price closer to that 78, The golden zone is actually here. And as smart money traders, we understand that banks can participate as long as it's at the discounted rate. The discounted rate is the 50% mark. So now I have to redo my calculation to make sure that if price pushes to this 50, it's going to give me 100 pips. So I'll look at what price is right now. If it pushes to the 50, it's going to give me 150 pips. That's a great trade setup for me. And it is going to pay me. I know it's going to pay me because every one of them have paid. So this is a reasonable expectation. Now, even though I expect this trade to go 150 pips, the God's plan strategy is only calling for us to get 100 pips. Okay. Now we're going to take it back to that video that we just watched. Are you satisfied with that 100 pips? Hey, Terrence.
Yes, sir.
How many pips did you catch this past week?
97.
97 pips. How many, what percentage account gain did you get?
7.
7% on a live account, right?
Yes, sir.
So 7% was enough for you.
It was enough.
There you go. And all you need to make is 3% this week to advance your live account, correct?
That's right.
And that's what it's about. So he gets 100 pips this week. Maybe it's another 7%, right? But the trading plan calls for your 100 pips. You make what you make in that 100 pips. Maybe he can add 2 positions in this trade. Maybe he only gets 1. But your goal is to win that trade. Then wait till the following week. Now,
oh, I'm out after 3.5%. I don't need all 100 pips this week.
That's a personal decision. But the point is, had you not stuck to your plan last week, it probably wouldn't have worked out. There was another trade that I thought you were going to take towards the end of the week. I'm glad you didn't, but well,
I didn't.
Well, but this is the temptation that everybody has to face. And my point in even bringing this up is because by you not taking that trade setup, it didn't put you back at square one, right? So
right.
It's the discipline of knowing when to shut it down. I see everybody, like when you make those comments in the chat, I see them, I read them. I have my own thoughts, but I've learned to just keep my mouth shut. TT, are you on the call? I just learned to keep my mouth shut because most of the time, if you win that first trade, in my thoughts, you should just shut it down. But some of you like to take multiple trades per week. And I don't know what you're doing. Maybe you've won 10% or maybe you won 13% and you're pocketing. You trade multiple setups in a week, correct?
Yes.
Do you have a set percentage you're trying to win that week, or are you just trying to get everything?
No, I have a set risk per trade, depending on how I feel, like how comfortable I feel about that particular what is it called, pair. Yeah. So
if you feel good about the setup, you're risking more.
If I feel good about a setup, I might, instead of maybe risking 1%, I might risk 1.5%. If that makes. But I'm never gonna. I'll never be like, oh, let me risk everything I got, because anything can happen.
Right, but so if you win that first trade, right? Do you do God's plan, or do you do your own? You do something different?
I do God's plan for maybe one, and then I do another plan for
okay.
the weekly setup.
Don't trade like TTO. TT is a little bit more advanced. But for those of you who are trading God's plan, especially if you're trading 3 or 4%. That should be your trade, right? And if you win that trade, just wait until the next week, right? Terrence won.
Oh, yes, absolutely. Yeah. When I was just trading God's plan, like, that is it. Like, be done and don't like let your psychology trick you out to thinking you should just take up every trade.
Right. I also know people who take, so here's my exception to that, right? So if you would have taken EA or GA last week, you would have won that trade by the London session, right? So in that scenario, you would have won that trade, and the next morning you could have got into AUD CHF at a better position than the people who took that trade initially. So in that case, if you wanted to trade both of them, the opportunity would have been there for you, right? And maybe you could have taken, if you had traded a 4% trade and you made $4,000 on that, on your first trade by London session, maybe you risk $500 of that $4,000 and you trade AUD CHF or something like that. It really depends on you as a trader and how you go about your business. But what I would suggest is you understand and you come up with that plan before the week start. Don't just do it on a humbug, because that's when you make the mistakes. You need to have that stuff already thought about, right? You need to have your pairs already listed. Hey, I'm trading this pair. If it wins and there's an opportunity to get in this other pair, I'll trade that pair, right? You have to have that stuff written out beforehand. Don't try to trade on a whim. All right. Don't try to impromptu trade, because that's when the mistakes start to happen. Everybody understand that?
Yes, sir.
Yes.
Yes.
So let me go back to what I was saying, because we kind of got off base. With this setup, all I'm looking for is 100 pips of that 149 pips. You set your take profit, you're good to go. Your week is over, right? You don't have to participate in the bull crap that happens on Wednesday, FOMC or whatever, or those high volatility news events. You can be sitting on the sideline, money in your pocket or money in your account, and all the volatility and the bull crap that happens on Wednesday does not affect you, right? That's where I want to be as a trader. Now, if after that volatility, some trade setups happen, maybe on the US 30 or gold or whatever the case may be, now maybe you're able to enter a second trade with a predetermined amount of money, that you've taken from your win. Those are the setups those are the times in your trading that you can get bonus pips, right? Maybe after a volatile news event and you understand the news. Hey, I understand the dollar should be going up, or I understand the dollar should be going down. If the dollar is going up, gold should go down. Now, I bring that up because did anybody notice that the dollar and the indices kind of got crossed up? Do you guys look at that type of stuff?
Yes, I did notice that, and somebody else mentioned it.
The dollar went down last week.
What was that? Look at what?
Yes.
Y'all see the dollar chart? It went down last week.
Talking about correlation.
Yeah, we saw it.
So generally speaking, when the dollar goes up, the indices drop and all that good stuff, right? There was a little diversion last week, and it's understandable, but hopefully everybody understands that the market conditions switched up a little bit, and I believe that the switch up was due to all those banks collapsing, right? There is a good chance, or a decent enough chance that the Fed does not raise interest rates, right? If the Fed doesn't raise interest rates, then the dollar is going to collapse. It's going to drop, maybe not collapse, but is going to lose value next week. So if the FOMC meeting, they come out and they leave rates the same, then I expect the dollar to get weaker. If they come out and raise it at least 25 basis points, then maybe it'll get a little stronger. But the dollar getting stronger is going to hurt the banks. If they keep raising the interest rate, it's going to hurt more banks. And we've had, I think, 3 bank failures so far. So the continued efforts of the Fed to raise interest rates are going to continue to put pressure on those banks. So keep your ear to the ground on it and understand that if you're in those trades, it's going to be very high volatility. So if you take the gold trade, if you take the US dollar trade, well, really FOMC is going to affect all the pairs anyway. So hopefully we will get in pairs that will pay us out, prior to that Wednesday.
Hey, Todd, can you are you about to go to another one?
I was. What's up?
I was gonna see if you can do Hope's favorite, the chef JPY and EN.
Chef JPY.
Yes, sir.
I sure hope that Hope. You taking the trade, Hope?
I'm more so looking at UJ right now, but I do like it. But the thing that bothers me is because it already started to retrace some, but it definitely had to retrace to the golden zone.
Hey, Todd, you looking at the day? You gonna look? Okay, go ahead.
But what's on the weekly though, Todd?
14 pips on this daily. Well, hey, the weekly is important too, but much.
Well, the thing that bothered me about this was the moving averages. But I think I told Terrence that still with moving averages far as
beautiful.
I don't like it.
Tell us why.
Well, it's 113 to that daily. $100 to the daily. So I don't mind it necessarily, but I think this pair is going to be a slower moving pair. And I really think that you're going to get the volatility after the FOMC, due to the fact that Chef is one of those safe currencies. What do the rest of these JPYs look like?
That looks like a stop run, so that's probably going to buy up to those moving averages.
Yeah, they're going to buy it.
Mm-hmm.
Yeah, I guess Chef JPY is not a bad one. Personally, I like that EJ better than Chef JPY though.
I know. I was just looking at it because it's definitely look like it's definitely going to buy.
Yeah, I think they're all probably going to buy it. So yeah, I mean, this is a decent one too. Listen, they're all going to work out. They've all been working out. So they're all going to work out. I just like others better. I like UJ. UJ moves better than FJ.
What about EN?
I love EN. this is Kim's favorite pair. That's why I had this trend line. Remember we talked about this a while back, Kim?
You did not say that was my favorite pair.
I know, right, Kim?
He was talking about trend lines, but I like EN. EN is one of those pair that I don't expect to sell. I expect it to buy up and probably continue to buy up.
It's bullish for sure.
Okay, y'all, humor me this. So for me on that, you see that bearish order block to the left, it tapped into it again. So this is what, like the third time it's tapped into that bullish order block.
Well, you mean this one?
Mm-mm.
The bearish.
The bearish one. Mm-hmm.
What about this bullish order block that it tapped into for the 1, 2, 3 time?
Okay.
So you're gonna call this order block out and ignore this one?
Well, I didn't see that one yet. You're correct. No, I should have called both of them out.
You got both of these. You got 2 back-to-back order blocks. You got a higher.
And the reason why the market create that order block for it to go up to that bearish order block. So my thing is it going to go tap in there?
So you have back-to-back order blocks. Order block, order block. Why would the market need to create back-to-back order blocks? To bust through this one?
Right.
I mean,
but what I'm saying, since it's done tapped a few times, it may or may not bust through it this time either.
I don't care. It's gonna give me 100 pips back to the golden zone.
So you had a Selena, if you look, there was a breaker structure to the top side on that right there. Yeah.
Yes, ma'am. I see it. Mm-hmm.
Pulled back to that.
To this order block.
Right there. And now it should continue up to, if Tide fibbed it to the -27, at least to the -27. If Tide fibbed that up move.
Yeah, which I don't want to give y'all too much of the cake. You know what I'm saying?
Oh boy, please. We've been feeling up and down moves forever. Stop it.
Hey, I don't want to give you. I want to give you the answers to the test. You know.
Oh my God.
Oh my gosh.
I'm keep some of the test answers to myself, which is this line that I drew like when Kim first.
Oh my gosh! And what's to the left of that, sir?
What's to the left of it? This ugly.
No, I mean to the that's not on the screen. Like where that's 27.
It's these highs over.
Yeah. Okay. And it's a little order block over there. I see. Oh my God. Oh my God.
The moving averages look good for the trade. Put them by without settling in.
What's that?
I was just saying the moving averages are showing that the bearish order block don't really mean it's about to sell.
I'd agree. And if Kim placed her nasty trend line,
you gonna leave my friend alone.
Better than them squiggly lines.
Kim, that's no, slow down, Kim. Slow down, slow down. Slow down.
This is no longer 1997, we're at 2023. Hard money concept.
Exactly.
But, we expect that thing to rise like dough. Yeah, I really like EN.
Doesn't it show you by the high highs as well? By the high being taken out, and it's the high to the left being taken out.
But of course,
another high to be taken.
I would agree with that as well.
So Kim, you gonna deviate and take this trade with us?
No, sir.
Oh my goodness.
Kim say she is GJ for life. GJ and US 30. That's all she gonna give y'all.
That's it, and that's all.
All right, I'm gonna send you a donate. I'm gonna send you a cash app.
You gonna send me a cash app? Oh, no. What's the cash out for? When you win?
Money I made this trade that you don't take.
Okay, I'll take it. I'm gonna text you my phone number so you can make sure it's right. Make sure you send it to the right person. Mhm.
Did anybody look at this NU trade? Bueller, anyone? None of y'all?
Not
Mm.
yet, because I had already picked out my favorites.
Okay. Okay. I reloaded.
What
So
do you guys look at to make a trade your favorite?
the pip count, am I going to get the retracement that I need? So if my goal is to make 100 pips, I want the candle from last week to have traveled a huge amount of pips, right? So if you look at UJ, or let's look at UJ. The most important thing for me is how many pips did this thing travel last week, right? So if I measure from wick to wick, UJ traveled 355 pips. Now, if you understand, and or subscribe to price action, where there needs to be a pullback, the next candle has to have a wick, right? Or it has to go up and touch the golden zone before it continues down, then you expect for price to retrace, right? And this wick tells you that the retracement has already started. So you want to see price go back up and touch this golden zone, right? The 50% retracement mark. I want to make sure that I have 100 pips, that I can get 100 pips out of this retracement move. That makes it my favorite, or it makes it a high probability that this is going to pay off. Does that make sense?
Yes.
Okay, so in this in-use case, right, we didn't get very much movement last week, right? It's only 145 pips, which means if it retraced to the golden zone, it's only going to be about half of that move. Does that make sense?
Could you zoom in? Could you make that a little larger for me? I'm looking at it from my phone.
Okay.
Okay, cool. I see it now.
Right. So if I go from wick to wick and I mark my golden zone, then I measure where price is now and where it needs to retrace to. If it retraces to the golden zone, it's only going to give me 61 pips. You see that?
Yes.
So I would prefer to trade UJ over this pair. Okay. Now, even though that is the case, I'm anticipating that this pair is going to continue to drop. So I think that this pullback is actually going to turn into a bearish engulfing candle this week. I think it's going to blow through this zone, especially if we raise our interest rates. And I can help. I mean, these moving averages help me determine that this is indeed a sell. All right. And if you're not an indicator trader, which is cool, use market structure, we broke this low. We broke this low. Back up. It retested this level. Now we expect the price to continue to drop.
All right.
So I believe that even if you took this trade, I mean, you're still going to get a decent pip count. Now, with that being said, I'm not taking this trade, but I'm just showing you that this trade is available if people wanted to take it. Or if I'm taking this trade, it's probably going to be after I already get paid from a different setup.
Okay. It just they're gonna take me some more time to look at it. Continue to gain some understanding.
Okay. Does anybody
Noah,
else?
do you understand that concept though? What he's talking about?
Yes, I do. I do. I've been talking with Terrence about it and looking at some videos, some of the YouTube videos and some other videos on the side, just kind of understanding the platform, how to create it.
Yeah, I think that you know, the more that you, I guess, investigate price action, you'll kind of be able to zero in off of what we're looking for.
Okay.
Hey, Hope, correct me if I'm wrong, but I didn't see any more weekly order blocks that are gonna give 100 pips before it get back to the golden zone.
What do you mean? Talking about from the list I posted or just in general that can be God's plan and the weekly order block? Is that what you're saying?
Yeah, from the list you posted.
I didn't measure all of the candles, Terrence. The only other
Yeah,
one was gold, and I think Todd hadn't talked about gold yet. That's going to be a good one.
Yeah,
Oh
gold.
yeah.
I think you got silver on there too, huh?
I got both, yes. But gold had the bullish order block.
Oh, you call this an order block this week?
No.
I was bad, but you know, it always varies with you.
Oh my gosh. No, I actually didn't. I called this one God's plan, and I called silver the bullish order block.
Excuse me, Todd. Why you have it up? When you do your long or short on your order pairs, at the halfway mark where the colors are split, where does that start?
Okay.
Does that start at the top of the wick, or where does that start?
If we do a short, all you have to do
Yes.
is place the position to where you're going to start your trade from, right? So if I start my trade from here, the green portion means the trade starts here. As long as it goes straight down, I'm in the green.
Got it.
If it retraces, that means I'm in drawdown.
Right. Okay.
All righty.
Got it.
Man, I need to see what's over in this wick right here.
Hey Todd, do you trade these like you trade the indices for your entry?
Not really.
Like, okay. I didn't know if you use like the sell stop and the buy stop trading these, or if you got in like more traditional way with gold.
Well, if I guess it just depends on when I'm getting in. But like this entry should probably be, I would expect at some point for it to hit here. I don't know if it's going to go up first. I would think that it probably won't. Maybe we'll get a retracement first, and then that's kind of a long way. Yeah, that's too long. So
It's currently in an order block, so that might be where the pullback happens and then continue to the upside.
So this is probably where the take profit will be for the weekly move. And gold might move crazy this week because of FOMC, but I would expect the pullback first before it goes up. So I would definitely look. Man, this thing is super strong on the 4 hour. You got a bullish 1 hour. Kim, I don't think it likes the order block that it's in there.
You expected to pull back further than?
I think it's still in the wick of that. I think it was was it a daily order block? Let me look.
Because that thing is saying it's gonna go a little higher.
It's in a daily, weekly. it's currently in a weekly order block. That's what I was saying. That's where you might find your pullback to start. If you look at that.
Okay, there's an imbalance. So I don't want it to break this level right here, basically.
Oh, yeah.
What level?
It's an 8 hour. Okay. Did you go to the weekly?
Oh, I mean, I started the weekly, but I'm just looking at how high it needs to go up before it turns around, where I expect to see it start selling. Because on the 4 hour, it's there's no wick. On the 1 hour, you're bullish, right?
Mm-hmm.
Which leads me to believe that it's going to push up, but I don't like once it gets to this black line, it needs to turn, you know.
What's at your black line, Todd? What's your black line?
It's 8 hour. It's some old highs right here.
Next day to go for me.
You see these? So maybe we grab the liquidity from these highs, or maybe we.
But then you got that imbalance. So if it's gonna go there, why not just take out the imbalance?
That's probably the weekly move, though. You know, it's or after it pulls back. But these are the areas that I'm looking at. So maybe it makes equal highs, relative equal highs with these, or maybe it grabs liquidity and pulls back. But I don't. I mean, that's a long way to go to just go straight up. I mean, we're talking.
Yeah, I don't think it's going straight up, but
it's going away. I mean, that we talking like $50 and $60 move. That I don't think that's going to happen. I can see.
So what do y'all think it's going to do at the beginning?
I think it might go and make equal highs right here before it turns around. Right? If it moves from the level it is now at 1988, I mean, that's a $20 move. So I mean that's a lot of that's a lot of pips to go up and then pull back. So we'll just have to see. But this is the area, like if it pushes up, I don't want it to break this area when it turns around. So that $20 move
going off with all these bank collapsings and everything.
Yeah, we'll see. We'll have to see what it does in that first hour. But this is the area that I would look for it to not bust. I would look for it to turn.
Hey, Todd, can you look at the 4 hour on this right quick? I just want to ask you something about that structure break that happened recently.
Right here?
Yes. Couldn't it technically just pull back to that and then go up?
Well, I mean, yeah, it could just pull back to this and go up. But you got all these imbalance, right? You got this imbalance right here.
Oh, yeah.
So I would think that it would pull back, close the imbalance, or come close to closing the imbalance. I would look for it to pull back to this level before it goes up. But if you're trading gold, you're not going to need this entire pullback. You're going to need half of this. This is how I would look. I would look at it right here. Now, if you look at this candle, this gold candle, the pullback will be ridiculous. Now, here's my thought process behind this. You're going to get a pullback, but if the FOMC meeting is good for the dollar, then gold will probably just keep keep selling. So in which case, maybe we get these equal highs, or maybe it grabs liquidity from right above this high and then it sells down, right? I can see that happening. You just have to understand that the chart, what we're looking at of the chart is we're very close to this high. So you either make equal highs, right? Or maybe you grab liquidity from this high and it might push down for a while, right? It might push down to this area before it turns around and goes back up. But it's definitely going to sell down at some point when the week starts. So I wouldn't look for it to push higher than this black line, which is basically 2008, I want to say. Yeah, 2008. And gold is back at 2000. Yeah, that's crazy.
You said it's back at 2008 levels?
No, it's back at the $2,000 level.
Oh.
But if I'm looking at this chart, I'm trying to pay attention to this chart, to Kim's move. This is Kim's chart.
I'm gonna chalk you up, Sag.
I was about to say, what? Okay, don't do chalk.
Yes, she does. She trades it. She believes in it. Yeah, this check.
You talking about Kenya?
Kim too.
You know.
Broke this high, it broke this low. Now we in the wicks, man. I expect for the thing to cook. We'll see. Kim, get your chalk shoes ready. This chalkboard, get on the chalkboard and draw it out. All right, yeah, but so gold is going to pull back. We should be able to see it though. I wouldn't expect for it to pass 2008. For those of you who are sitting on the gold trade. Ooh, silver. Silver's it looks just like gold. It doesn't have a wick yet. So I really can't put the fill out, but I'm gonna do it anyway. Yeah, once it turns around, it'll sell down there. So I would look for silver to hit this imbalance, more than likely. There's an order block in there. Maybe it's the 1 hour, 2 hour. There's an order block right here, but this is where I expect silver to hit before it sells. And that price is $22.76. Anybody got any questions? It's a lot of dollars out there to be made.
Yep. I'm gonna stick with you, Jay. And maybe eating. So what's your favorite pair, Todd?
What's your favorite pair?
I just told you.
You said what?
We already know. We already know Todd partial to UJ. He been partial to UJ for the last 2 years.
I like UJ. I like EN. I like Gold. I mean, it's a bunch of low-hanging fruit this week. A bunch of it.
So what is your favorite low-hanging fruit for the people in the back?
All of them. All of those pairs. They're all trades. UJ, EN, gold, silver. You know, the thing that I like about gold and silver is you can wait for it to start selling. It's plenty of pips in those types of trades that you don't have to get in at the very beginning. You don't have to have a quote unquote sniper entry.
Okay. So you're saying on those, you wait for a stronger order block, maybe on the 4-hour or 2-hour.
I'm not going to nail you down to a time frame, but you'll see it turn and start selling. Right? You'll see it turn and start selling. It'll no longer be going up. It'll start going down, whether that's on the 1 hour, whether it's on the 4-hour. You know, if I tell you to wait till the 4-hour, what if it never gives you an order block?
I mean, yeah, I know. I mean, you got to put some common sense in there too. I was just, you know, because I'm really going to trade it this week. I may just put it in my demo till I get it.
Well, I mean, you'll be mad. I mean, you know, it's going to sell. You see on the chart, the charts tell you it's going to sell. So, I mean, it is what it is. But, you know, EN is a good trade. To me, UJ is a good trade. EJ look like a good trade. It's a lot of great setups. You don't have to limit yourself to any one of them. You know, if you took any of those 23 trades last week, you freaking won. That we can't stress that enough. You won any of those 23 setups. That should tell you everything you need to know. We don't have any reason to believe that this week will be any different than any previous week, right? And what I mean by that is you just go back to the last time that you saw it not work. So I think if you take the trade setups, you're going to get your pips, right? Now, if you're greedy and you try to get 115 pips instead of 100 pips, or you try to get 149 pips instead of 100 pips, then you might get fried. You know, I'll tell you something my dad told me one time. The bulls get paid. That means if you're buying, you're going to get paid. The bears get paid. Means if you selling, you'll get paid. But the pigs, the greedy mofos, they get led to the slaughter. So if you want to get greedy, you know, be prepared to be slaughtered. It's not a guarantee that you'll get slaughtered every time, but it's a guarantee that it's only a matter of time before you get slaughtered. So what I would suggest is whatever pair you decide on, we've talked about several, whatever pair you decide on, when you get in that trade, you get your 100 pips and you get your ass on the sideline because there's FOMC, there's other news events, maybe banks crash. We don't know what's going to happen, but we can reasonably expect to be paid out on these trades that we've identified for 100 pips. Anybody got any questions?
Thanks, Todd.
All righty, childrens.
Hey, Todd, I have a quick question. How is Credit Suisse's issue gonna affect the market overall?
If I knew that answer, Credit Suisse would probably pay me $1 billion. But listen, I don't think any bank collapses are doing great things for the market, you know. But I think overall, if you have continued bank failures, the federal government is going to have to step in, because if the people lose confidence in the banks, you know, then you're going to have greater problems. So I don't know what the effect will be. I don't think we can lower interest rates right now. I know we can stop raising them, but I don't think we can lower them. And if we lower them, we're going to run a huge danger of stagflation. So stagflation means, you know, you'll have a like stubborn inflation. So I think we need to kind of watch, you know, together, like as a group, because I wasn't trading the last time, like in 2008, I wasn't a trader. So I can't tell you that I have experience trading bank failures. The overall economy, you know, we do have experience trading zero interest rate environment, and we're getting experience trading the environment that we're in now, which is when we raise interest rates. So I think we all have to proceed with caution, you know, when it comes to the bank situation. But I think as you see the banks in distress, I think that's why you have gold, you know, and these metals close to their all-time highs, because when people lose confidence, you know, in dollars and systems, gold has been around forever, and the value of gold is finite, you know, like it doesn't depreciate like the dollar does, you know. The dollar goes down, but you know, gold is a commodity that's tangible. You can hold it, you know. So I think that as long as the banks are still in trouble, the value of gold will continue to climb. But I would use these, we need to use these charts to our advantage and just trade the chart. And that's, you know, I guess it kind of hits home the point that I'm making about staying in the trade, trying to be greedy, because, you know, you quote unquote know it's going further. I would guard against that, you know. And in these environments, I think you should take your trade, get your pips, and get on the sideline as soon as possible.
Sorry, do you
Thank you,
think that?
Todd.
Sorry, did you think that the these politicians knew it was coming? Because at the last Powell testifying, they were asking a lot about the banks, asking Powell, would you, you know, save the banks? And
so I think
that, I don't know if this is a question for Sean or, you know.
Well, yeah, I mean, Sean can chime in, but yeah, everybody knows this. Like, I think it's a reasonable expectation to understand. We know that Americans are going to default on credit cards. I think it's a reasonable assumption. Why would Americans default on credit cards?
Yeah, but when I was watching the testifying and all the questions and everything, I was thinking, why are they bringing up banks all the time? Why are they bringing up, would you save the bank, and all of this about, you know, reassurance of the consumers in the banks? I was thinking, why they keep on going on about the banks?
But do you understand what the banks do? Do you understand how they make money?
How do they make money?
By the
Nobody told me.
interest rates. Is it by the interest rates? I'm not sure. I don't know. Explain, please.
Well, they do. They do make money by the interest rates, but the interest rates affect them too. So, you know, the government sells bonds.
Yes.
Yeah.
And so what is a bond?
I know it's on a piece of paper, but not that's all I know.
Right. It's saying, hey, if you buy this now, on its maturity date, it'll be worth whatever amount of money, right?
Well, what are you buying?
You're buying a bond, which is a set value of currency.
Okay. Where the currency is at now, or?
Yes.
Okay. I didn't know that. Yeah.
But so if the inflation changes, it's kind of like paying for your house. If the number keeps going up, then the value of your bond is going to change, right? So that means if you bought a bond and it cost you $500 3 years ago, and then when you cash it out, it's worth $300. You lost $200 on that bond, right? Not only did you lose $200, you've lost 3 years of opportunity,
Right.
you know. So that's kind of the situations that a lot of these banks are in, you know. Maybe they did not diversify. Well, obviously they didn't diversify enough, right? That's why they're all under this pressure.
Okay. Yeah. I
know that not enough of them trade. That's what I'm, yeah, they don't trade our deposits. They don't, you know, a lot of them don't trade. You know, trading is considered a risky thing. So most people want to put their money in more firm assets. It's kind of like you know, like Sean was saying, if you can borrow money at 0 interest rate, then you can put that money to work, and you got to pay it back, and you don't pay it back with higher interest, then that's cool. Like if I can borrow money at 0% interest, make money on that money I borrow, then pay it back, it's awesome. But if I got to borrow money and it's going to cost me 7%, and I might only make 5%, then I lost 2%. Or I might only make 10%, it's not worth the gamble. Yeah, other assets. So bonds are one thing that you can sink your money into, right? You can also buy other, you know, you can buy houses, or you can buy real estate, you can buy different things. You should diversify, like even people should diversify, but especially businesses should diversify their portfolio, because they need that portfolio to be strong enough to weather the ups and downs of the market. And that's really what these idiots are supposed to be doing when they're CFOs or you know, when they're in charge of these entities. They shouldn't be placing all their eggs in one basket. But apparently there's not enough checks and balances on the system, because that's why you have, you know, banks and stuff collapsing. Maybe they assume too much debt, right? And what do I mean by that? Maybe you're a bank and you buy 6,000 houses because you're assuming you're going to sell 6,000 houses. Well, the interest rates climb. Now you're holding the houses and nobody's buying them, right? And you can't get rid of these houses, so you have to take L's on all those houses. Well, why would you buy 6,000 houses if you only have X number of dollars? And why wouldn't you buy something else that might benefit from, you know, high interest rate environment? That's what I mean by diversifying and buying other assets, other classes of assets. So if you put too much of your money in one thing, much like you as an individual, if you put too much of your monthly budget into one thing, you can easily run over budget. Then you have to break out that beautiful credit card, that piece of plastic, right? Y'all know how y'all go to dinner because you're going to get paid on Tuesday. So you can let me just run this on my credit. I'll get paid on Tuesday. Well, what people don't realize is, you know, the longer this balance sits on your credit, and every time the Fed raises interest rate, the first rate that climbs is your credit card. Right? So now that $100 that you was paying the minimum balance on, and you was paying $35, now you got to pay $50. And you just keep running it up. The higher your balance gets, the higher your payment gets, until you get to a point that where you can't afford to make a monthly payment on your credit card. And now you're in default. So what I was asking you, Leandra, is the reason why those congressmen were asking about the banks is because they understand how the banks do business, and they understand that the higher the interest rate goes, the higher the banks are going to go into debt, you know, in a time where they're holding assets. And it's the same way for the American people. Everybody understands that Americans live off credit. They use credit cards. We buy our gas. Some people buy groceries on credit. And even though we know we should be doing the right thing and balancing our checkbooks and balancing the family budget every month, most people don't. Most people don't. They swipe their credit card, right? Why would you ever buy food on credit? But people do. Or they swipe, you know, they buy gas on credit. And you would think that if you bought gas on credit, you would just basically debit it out, you know, that month. But a lot of people don't, and they don't have the money. They kind of assume that things will go back into place eventually, right? You know, inflation is up. Eventually it'll go back. Let me just put it on my credit card. Well, if it doesn't go back to normal in a timely manner, you've ran these credit card bills up. You're not getting paid any more money. You lost your stimulus check. So now you have to make these high interest credit card payments. It's only a matter of time before America defaults. And if you follow the reports, every month, you know, the credit bill in America gets higher and higher for each family. And last month was the first month that when they did the survey, they said that people are in fear of defaulting on their personal credit. Oh, it's definitely going to be a recession.
Thank you.
The other reason too, Leandra, that, you know, they're looking at the yield curve.
Oh yeah.
You know, so the yield curve references, you know, the yield that you're going to get on short-term bonds and long-term bonds. And, you know, I think the idea is you want to get more money for longer term bonds, say between 15 and 30 years, you know, and when you can get more money on a short-term bond than a long-term bond, what that's basically saying is, you know, over the long term, you know, we don't have much confidence in the government or the financial system. So when those numbers start getting too far out of whack or headed in a direction that indicates they're going to get out of whack, you know, then that's why those Congress people were asking those questions about the banks, because that curve is inverting at a rate that it shouldn't be inverting. You know, there should be a distinction between the money. If you buy a 2-year bond, you know, you shouldn't be able to get more money or close to the same money as you get if you buy a 15 to 30-year bond. And when those numbers start getting too close together or out of whack, meaning you can make more money in the short term than in the long term if you were to buy those bonds, then, you know, that's signaling, you know, recession, depression, you know, financial hard times, basically. So when they see that, then they know that the banks are going to potentially, you know, have problems. So that's why they were asking those questions.
Yeah, thank you for that. That's yeah, that explains a lot in terms of what I listen to on the news as well, like CNBC and Yahoo Finance. Yeah, so I need to read up a bit more about that. I guess I need an advanced economic course.
Yeah, and the other thing I would say, and this is my opinion, you know, I don't know this to be fact, but you know, earlier we was talking about, you know, the dollar going down and equities going down, which they don't usually move. They're usually not.
Yeah,
They usually move together.
negative correlation. Yeah, they're not usually in negative correlation with each
Right.
other. Oh, sorry, positive correlation with each other. They're normally negative correlation with each other.
Right. So to me, when I see that, to me, that means recession, or financial downturn, which, so that's just my opinion, so we'll see what happens. And now I guess I'll leave it at that.
I have a quick question. Are bonds subject to market risk?
Say again?
Are bonds subject to market risk? So if do they follow the S&P 500, or so they grow or compound interest, or do they lose as well?
So bonds are, they're not, they really, I don't want to say, I'm going to say they don't have anything to do with equities, although that's probably not true. And this is what I mean. When you buy a government bond, at X percent, you are going to get X percent at maturity.
Right.
So they, in that sense, it's not like speculating on equities, so in a zero rate environment, which is what we had, from like 2009, until the Fed started raising rates, I would argue that you would be a fool to buy bonds because you can't make any money on them. So as the government raises interest rate, let me back up. So if you can't buy bonds because the rates are at zero, the only place you can go is into the S&P 500, the US 30, the NASDAQ, which is why if you look at that chart that we pull up every now and then, that yearly chart of the US 30, the NASDAQ, and the S&P, you see it just going almost straight up. Because people could not make money on bonds. So no smart person was buying bonds.
What? Let's, in reality though, like banks still bought some bonds because you have to diversify, right?
Yeah, they do.
Right, but not very much though.
Right, I agree. I'm just saying. So just imagine they're buying a few bonds and they're buying the S&P. So go ahead, Sean.
So
wait, I don't mean to cut you off. So let me just, so from my understanding, banks don't usually participate our money or their money in any variable account. So anything that goes up and down or whatever have you, from I know that they buy insurance for their money.
That's not true.
Not true. I mean, why did everything crash in 2008? What were the banks involved in?
Housing.
Subprime, right?
Subprime what?
Lending.
Subprime mortgages. Meaning if you're a person with a shitty credit history, you got a 400 credit score, 500 credit score, they were loaning you money, to buy houses that you couldn't afford, right? And they were doing that across the board.
Yes.
So they were involved in that. And they were packaging, those shitty, call them investments, financial instruments, and they were buying and selling them amongst each other. So they do participate in this kind of stuff. Maybe not in exactly the same way that we do, but they
okay, so that's what I was asking. So that was the misunderstanding. So yeah, they might not have 100%, like, subprime lending, people with not good credit scores and stuff like that, high interest rates, people defaulting on their credit. I understand that part, but they don't trade with your money. They don't put your money into the S&P 500. I don't believe so.
So let me ask you a question.
I don't know what they do. Everything, the whole gamut of it.
Right.
Go ahead.
Let me ask you a question. Whenever they say that that the banks, these are bank levels, or these are institutional levels, what are they talking about? Who are they talking about?
When they're talking about the bank levels, what? Say that one more time.
You're trading. You trade currencies.
Yeah, we're trading.
What is the bank level? What bank? Who are they talking about? So
I don't know.
This is what you need to understand. Bank of America might not have a forex account, but Bank of America takes a chunk of money and they give it to Berkshire Hathaway the same way you do. So yes, they indirectly, they're subject to the same market conditions that everybody else is, which explains why that yield curve is, when it gets out of skew, they get out of skew because they do buy some bonds. They are invested in some hedge fund, right? That's why it's a hedge fund. It's not just people's money, it's institutions' money too. So they are exposed to those same risks. And that's exactly why, like Sean was saying, in a zero interest rate environment, they are invested in the S&P and all that good stuff. So when the S&P starts going down, those banks are taking a hit. They're not making any money in those zero interest rate bonds that they had. So they're just losing money. And that's how you get into these situations. The banks, in my opinion, will be better off if they did have some individual traders. They could take advantage of short-term market. But they're not nimble like you are as a trader.
Gotcha. I'm just asking, thank you. So Todd, all this saving SVC and the Fed coming in and doing all that, it's not gonna help the situation. The banks are still going to have these issues.
So listen, it does help in a sense because.
And did they just actually really print that money to give SVC?
Well, I mean, I think they did. You know, they say they didn't. They say there's an issue that banks pay into. None of us know that. But here's how it helps. As long as it looks like everybody is doing something, individual people won't go to the bank and try to withdraw all their money, because that's when you have problems, right? Because there is not enough money for everybody to withdraw the money that the banks say they have. They don't have all that cash. So the minute that people start trying to withdraw money and they start getting certificates saying you're declined, then you're going to have a bigger problem. So it does help that the Fed, and you saw something that you'd never seen before. Other banks start depositing money, rescuing banks, right? Because it's that serious. This is kind of like the airline industry crash. You don't want to start messing with people's money and their confidence in you taking care of you being the custodian of people's money. Because once that happens, you might have the masses going and trying to put their money in their mattress, and now the banks can't make money. So if the banks can't make money and they close, where is your money going? Everybody gets paid by direct deposit. So it's the system cannot fail. Like, they have to do what they have to do.
So that's why the big banks came in and rescued the little banks.
Yeah.
Okay.
That's why they did it in 2008, which pisses the people off, because when you fail individually, you get told to fuck off, but when rich people fail, they get bailed out. And that's what basically too big to fail means, because it's all about the confidence in the system, but it's good from a confidence standpoint, or what I call a front door standpoint, but it's bad from a back end standpoint, because the whole reason we're raising these interest rates, et cetera, and doing what we're doing is to fight inflation, right? But if you're continuing to print money, then you're not. The firefighters are at one end of the house putting out the fire, and you're pouring gasoline at the back end of the house to keep it blazing. It's the same thing with printing all the money and giving it to Ukraine. that's why a lot of people don't like us giving all the money to Ukraine. And I get it. I think we need to give it, but I do understand, why some people are pissed. And I do understand longer term, we're raising these rates, we're doing all this bullshit, but we're giving this money to Ukraine. The banks are probably or the government is probably printing money to bail these banks out. So, it's kind of a wasted exercise, in my opinion, but what do I know?
What's the option?
What's the option?
Mhm.
I think the option is for your Lord Jesus Christ to come down here. There probably is no fix, given
Mhm.
all the different factors and personalities and so on and so forth at play. It's the world we live in, is what I would say.